Welcome to the Smart Biz Advisors podcast, where we talk about everything small business and entrepreneurship. I'm your host, John Jones, and in today's episode, we're diving into the topic of paying yourself from your startup. Joining me is Mr. Mark Fackrell, an expert in finance and entrepreneurship. Welcome and good morning, Mark.
Good morning, John. Nice to talk to you.
Great to have you. Exciting, important topic today. Let's start by talking about why it's important for entrepreneurs to pay themselves from their startup.
I mean, that's kind of the whole reason that we do all this, right? I mean, we like to do things that, excite us and encourage us and bring us joy in life, but we also all have to eat. So that's why we got to get paid.
Yep. So obviously, first and foremost, you need to be fairly compensated for your work, right? That's number one on top of the agenda. So, with that said, what do you think are some of the best practices for paying yourself from your startup? What are the main points of this that you want us to know?
So, I mean, you bring up a good point. We need to be fairly compensated. And I mean, the reality is that as we are starting our businesses, very rarely are we actually fairly compensated based on the amount of time that we're putting into it.
Right.
But the goal is to get to a spot where the business does generate enough income so that you can be fairly generated or fairly compensated, right? So one of the first keys to that is figuring out how much money you've got, how much money you've made, how much money you've spent, how much available you have left for yourself. And this kind of goes back to, some of the earlier conversations we've talked about budgeting and record keeping and things of that nature. So the very first place, you've got to make sure that you're separating your business expenses from your personal expenses so that you truly have an understanding of what it is to run the business.
All right. First step, to separate your business and your business and your personal finances should be separated. Correct. Step one. Okay.
Yep. So then once you've got an idea of, where your money is going and where you plan for your money to be going, in the future, then what you've got to do is you have to figure out what expenses it requires for me to run the business. I've got to have my rent, I've got to have my phone, I got to have my marketing and my insurance and all that stuff. Once you've isolated what those key expenses are, then you see how much there is left, right?
Okay.
So that money is theoretically all available to go to you as the owner of the business. You should probably incorporate some, buffers in there though. So, you don't want to be going along for 2 or 3 months and then all of a sudden there's a road bump that you had not anticipated. And then there's no money to pay for it because I've taken all the money out myself. So you want to make sure that you establish a buffer, a contingency fund, if you will, that allows you to overcome those hurdles. And then, then you can set, yourself salary.
So, first of all, figure out, make a budget and figure out what is reasonable in the purview of your economic and your business situation, right? So how do you go about determining what is a reasonable salary?
Well, I mean, there's really two answers to that question. One, you can, look at the various different websites out there. Most states' departments of labor have things that say, statistics that say this is what a person doing this thing should get paid. There's websites like Indeed and Monster that give you salary surveys that indicate what you should be being paid. But really it comes down to the resources available to the business, right? So, I mean, once you get to the spot where you're generating enough to pay yourself a reasonable salary, then that's how you would want to do it. And then the rest of the money would go back into the business and you could use that for expansion or you could...
websites that might track the average salary or the appropriate compensation for a specific task or occupation, etc. But I I sense that uh, there are relatively few scenarios where the at least at the beginning the entrepreneur is getting that standard compensation for that occupation from his or her small business, right?
Right.
So, you know, how do you sort of reconcile? Okay, there may be $2,500 in profit in a month for an entrepreneur to consider as their personal income. Do they take the whole thing every time? Uh, you mentioned a buffer. What are sort of the best practices if you're in a situation like that?
I mean, it really kind of comes down to the specific situation that the business is in, right? I mean, if you're in a business where there could be large expenses, then that are unexpected, then you
Okay.
want to build a bigger buffer, right? I mean, if it's
Okay.
relatively minor, then you can keep the buffer smaller. If you're in a service business, for example, doing consulting or something like that, the likelihood of there being some large expenditure come up that's going to require a lot of money are pretty small. If you own a business that has like brick and mortar with equipment and HVAC, things like that, where something could break, then you want to have a larger amount set aside for that.
Yeah. Yeah. I think though that there's probably some challenge with uh, work-life balance or the entrepreneurs love for what they're doing. They really desire to succeed, so they tend to pay themselves less, or they choose to accept a lower compensation. Do you have any kind of guidance or advice for someone who is in this kind of predicament?
I mean, that's a personal choice, right? I mean, if you're taking enough money out of the business to survive on, then, save the rest of the money and reinvest it for future growth. That would
Okay.
be my suggestion.
Yeah, that sounds like, yeah, that sounds quite reasonable. And so, uh, are there any kind of is there any impact or influence of uh, business structure on how entrepreneurs pay themselves? Like what kind of company they're running, or what kind of business formation they have?
Yeah, so that's kind of transitioning from how much to pay yourself to the nuts and bolts of how you pay yourself, and that's a very legitimate question, and I get that question from a lot of small business
Oh
owners.
yeah.
And we've talked in some of our previous episodes about business formation, and that has a big impact on the way you pay yourself. So, just kind of a brief rundown of those. You've got sole proprietorship, partnership, LLC. The way the government views those is they're all just kind of an extension of yourself. So what you do is you just take the money out of the bank account. You obviously have to keep track of it. The challenge for that is that when you do that, the government is definitely keeping tabs on it. So you're responsible to file quarterly tax estimates with certainly the federal, and in most states you have to file an estimated tax that you would owe based on the money that you're taking out. Which is something that your bookkeeper or your CPA can help you figure out what that is going to be, but it's an additional step that you have to do. A lot of people will get into a situation where they're taking draws from the company, they're taking a paycheck, and they're not
Hmm.
withholding the taxes, and then they get to the end of the year and they're sitting here staring at having to pay their entire year's worth of taxes all at the same time, and that is not a good place to be.
Yeah. Yeah. Been there. Okay.
I think I
So
think I think everybody that's probably started a business has been there, and it's not a very fun place to be. So the way to combat that is to create yourself a W-2. So you can do that if your business is a C corporation or an S corporation or
okay.
an LLC taxed as a C corporation or an S corporation.
Okay.
And then what you'll do is you'll set up a scenario where you're getting a paycheck and you're having taxes withheld, just like you were as if you were working for somebody else. And you can do that yourself. I would highly recommend that you not do that yourself. There's a ton of free services out there, or not free. There's a ton of services out there that can help you with that. There's, ADP is something a lot of people are familiar with.
Okay.
Paychecks is another one. My personal favorite is a program called Gusto. They charge you $30 a month, and you can buy your workers' compensation insurance from them. They will file all your tax returns. They'll withhold the money from your paycheck and send it to the government, and then they'll send you a W-2 at the end of the year, and it'll be just like having a job.
Oh, okay. So there is a sort of online platform that will help you manage and keep track of this kind of thing.
Yep, absolutely. And a lot of those platforms have the ability to buy, I mentioned workers' comp insurance. That's something that, a lot of people may not think about. If you've got employees, you're required by law to carry workers' compensation on them.
Mm-hmm.
So you can actually buy that through a lot of these different platforms. Some of them give you the ability to buy health insurance, life insurance, disability insurance, and it's all in a package where you can just sign up for the things from that website. So it saves you a lot of the hassle of having to go and find these things separately. But the biggest thing is, filing the taxes and withholding the taxes and filing all the returns is just, I come from an accounting background, and I've, owned an accounting business for the last 15 years, and we don't even do our own taxes. We use Gusto to do our payroll for us because it's just so much simpler.
Yeah. It sounds like it. Sounds sort of indispensable to have something that keeps kind of tabs on, or a record of this, maybe keeps it at the forefront of your mind.
Absolutely. And the nice thing about these operations is they'll actually take your taxes out at the same time that they send you the money. So you don't have to worry about setting the money aside and filing the quarterly return, the quarterly estimates.
So is there there's definitely some difference in how an entrepreneur takes that compensation. So we were just talking about a limited, whether it be a partnership or an LLC or a company, you may take a salary in one scenario or a distribution or a dividend in another. How does that work exactly?
So again, it's based on the company structure. So as a small business owner, if you're using a corporation, you still have to pay the profits on the business, though, right? So you're still paying the unless you're a C corporation. I should make that caveat. In that instance, it's super simple. You just get paid on whatever the paycheck that you get is, and then the company itself actually pays the taxes on its own profit. But for every other situation, you have to pay the taxes on your paycheck, and then you also have to pay your taxes on the profits. The good thing is that you can deduct the wages that you pay yourself as a business expense, so you won't be paying, that won't be profit that shows in business.
Yeah, those are some good points, actually. That's very important. So, all right, that leads us to, so then what are some common pitfalls that entrepreneurs should avoid when it comes to paying themselves from their startup? Is there anything that they need to watch out for, or any problems or issues that could arise from doing one thing or another?
The absolute biggest thing I think that most entrepreneurs run across is they think that just because there was profit there at the end of the month means that money is all theirs. And you've got a plan. You've got a plan to make sure that you're paying all of your vendors. You've got to be planning for any contingencies, because I run across the situation a lot where somebody just takes every penny of the money out every month, and then something goes wrong, and they're like, "Well, what the hell do I do?"
So there's no putting the money back once you take it. It would have to come back in another form, wouldn't it? So that would be a problem.
Well, I mean, you can put the money back. The problem is that, I mean, it's human nature that once you take the money out, it's likely
Yeah,
not going to be in a situation where you can
to be
put it
coming
back,
back.
right? So
Aha,
if you just keep it in a separate pile that
that's
says
different.
this
Yeah,
is for the business, then you don't ever even have to worry about that.
yeah, yeah. All right. So that's quite a lot to, you know, to to digest. So let me just ask you: do you have any uh, tips or advice for small business owners who are looking to pay themselves from their startup? Whether it be, how should they plan, or what kind of, you know, rule of thumb, or anything else you might share with our listeners who are looking to pay themselves from their startup?
It kind of goes back to some of our earlier conversations. I mean, you need to make sure that you're in a financial position to start the business and to be able to have it operate itself, independently on its
Mm-hmm.
own.
Uh-huh.
So you want to be personally in a spot where you can withstand some of the challenges that it might encounter, and then I would say work with your CPA to make sure that you're handling the tax aspect of it
Yes.
correctly and that you're setting aside the proper amount to pay for the taxes. I mean, the taxes is really one of the biggest things associated with business profits and
Yeah.
business owners' compensation that gets people because, when you work for somebody else, you don't ever even see that money. So it's like it never even existed. So when you're a small business owner and you're now having to pay your own taxes and be responsible for taking that out and getting it to the government, that's a big hang up because most people see their paycheck and they're like, this is all mine, but it's not that way when you own your own business.
Yes. So that's why a tool like you mentioned, Gusto, is is deducting that, is making it clear. So that's very helpful and important, right?
It's absolutely important. It's critical. It's absolutely critical. And I've seen people, go out of business because they got themselves into a tax situation because they were, not treating it like they ever owed that money to the government. And they absolutely
Yeah.
do.
So we've talked about separating the personal and business finances, talked about ways to determine what your salary is, um, obviously relative to the business structure, um, having enough money to meet various business demands like reinvestment and whatever it may be. You mentioned seeking the professional advice of your CPA. With all that said, are there anything else you need to add or would like to add to this discussion?
I think those are probably the high points that people need to consider.
Okay. Okay. Great. So, well, thank you very much, Mark, for sharing your insights on this really important topic. Um, that's all we have for today. All right, everybody, join us next time as we continue to explore the world of entrepreneurship. And until then, remember, dream big, guys. Take bold steps towards your goals. Thanks for listening. We'll see you soon.
Thanks, everyone. Thanks, John.